All right. Hey there. Chris Franks with Texas West Capital coming at you live just a few minutes after 11 a.m. Central Standard Time here on Friday, the 21st of June, 2024. Yeah, 21st of June, 2024. I got that right. Coming at you live here again from just north of Houston, Texas. Hopefully, you guys are doing all right, guys and gals. Checking in here. Who's feeling good today? It is triple witching, and we'll talk about that in a minute. But before we do, just remember, do me a favor, go ahead and hit the like button. Share the stream. I'd love for you to do it if you wouldn't mind. It kind of gets it out there for the algorithm, so the algo starts showing it up to other people. Other than that, leave a comment. We love to hear from you guys, see what you guys' thoughts are, whatever. You seem to really enjoy the Wednesday's Beards and Bitcoin show. If you guys haven't watched that yet, make sure you do. I think we really get some great information out there and some great thoughts moving beyond Bitcoin for Bitcoin's sake. And when you start doing that, the possibilities are really astronomical. So hopefully you guys that have been watching, you're like, holy crap, yeah, wow, I got some thoughts going now about the future of Bitcoin. Because if all you do is think about Bitcoin in terms of the price, and that's it, well, it's easy to convince yourself, oh, it's not going to work, or it's a scam, or all this other stuff. But when you start looking at it and recognizing it as, a potential base layer upon which the future is built, then things really start getting interesting. And we've discussed over the last few episodes of Beards of Bitcoin there on Wednesdays, some ideas with that and thoughts about where it could be headed and what we're looking for. And anyway, yeah, and especially with AI now coming in with everything. So, man, oh man, just trying to give you guys the information out there for you to really see it for more than just simply what most of online talks about. To really see where that potential, for you to really see where that potential is. So anyway, how are you guys doing? I see Data, what's up, man? Peter, K, what's going on? RM is here. Bamboo, what up, buddy? Manta, Ray, is that Ray? R4Y. Hello there, good to see you. See you guys checking in here. So today we're going to talk about a few things. We're going to talk about the potential that alts might finally be ready to kind of move now. And if they are, what does that mean for Bitcoin, right? People have just really gotten bearish on Bitcoin, which, again, for people that, I don't know, if you're a professional trader that's been through multiple cycles, especially outside of Bitcoin, just in other markets and everything, it's hard to really understand why people would think this is a top. Tops aren't normally, built this way. Right after you get to a new all-time high, right there, all of a sudden you're building a top. That isn't the way it usually works. Volume within this 3 month range. The 3 month range isn't, what you'd look for. We're not getting, expansive volume on the pullback, anything like that. So, we'll take a look at the charts here in a minute. Murray, what's going on, man? I see you there. But one of the other big things is that options, right? So when you're looking at maturing markets, everything in markets, it's not just spot or ETFs or derivatives that just by themselves kind of tell you what the price is, right, or where it's going. But generally speaking, the more mature a market gets, the more you can look toward the futures market as an indicator of where price is likely headed, which is why we talk about contango and backwardation. And so if we're looking at options from Deribit, right, the options are really looking bullish. We're seeing a lot more calls coming in, looking up toward 90 and 100,000, which tells us that the market is looking to go higher, right? So rather than listening to just some person that you don't know anything about, in social media because they have some large following, try following the money. I mean, look where the people who really have money, right? Look at what they're doing. And so that's a great way to use, options and futures and watching what's going on there. So yeah, if you're looking at like the December to March expiry area out there, Again, those $90 to $100,000 calls are really kind of popping up. So, it makes it really hard to kind of look at that and go, oh, well, even just that and go, oh, well, yeah, the top's in. That doesn't, make a whole lot of sense. So, again, we'll kind of look at that here in a bit as well. What else we got here? Oh, man, had a great comment over at the Trading Academy. Let me see here. Just this morning or yesterday, whatever it is. I went ahead and posted it there on Twitter or X or whatever you want to call it. If you guys follow me there, but basically, my man here, Scott Webb says, I only used the 2 price action techniques I learned in the last 2 weeks and had the most seamless trade of my life. I'm pumped about this. He also said I was able to use, he talks about one of the tricks that I taught for confluence. He says half profit locked in and a stop in profit. Ditched the 8 other indicators I had and had maybe my most successful day trade ever just using those two techniques he learned in the last 2 weeks. So, I mean, literally, guys, people come in, they join TWC Trading Academy, right? Within 2 hours, because our sessions are about an hour long. We get 3 of them a week. We talk about Wyckoff on Mondays, price action on Wednesdays, and Elliott Wave on Thursdays. But you can take 2 price action sessions. That's 2 hours when you first join. And after those 2 hours, you can go from zero to hero as a trader. Just learning that. That's what Scott's talking about right there. I don't know anywhere else that you guys can do that. Not only that, but then you get in there with the Elliott Wave and the Wyckoff, and all of a sudden in the proper risk management, all of a sudden you're really learning how and why markets move the way they do. And the fact that they aren't efficient, that they aren't random, that you can forecast where price action is headed. Now, it doesn't mean you're always going to get it right. We're human beings. We're going to make mistakes along the way. But damn, when you finally figure that out, you start understanding it, a whole new world kind of opens up to you as a trader. And that's what I always hope to teach people, whether it's either in the Trading Academy or whether you guys are just watching here on the streams or watching my tweets and whatever. Everything I speak about when it comes to trading is, it has a purpose. And if you really pay attention, you'll pick up a whole lot. But definitely the quickest, easiest way to do that is through the TWC Trading Academy. Okay. So just kind of putting that, I was real excited, man. I mean, just love getting feedback like that. By the way, we also did, if you were in those that were in the price action session on Wednesday, we had a couple of setups in there. We had a Bitcoin setup that had a potential run to 13R, depending on where you entered on that and where you took your profit. We talked about different profit. We talked about the setup. We talked about different profit targets and how to go about it. We also had render, which got us 3.9R. If you don't know what that means, R is just your return on risk. So basically, for a 13R, if you risked $1,000, that means if price hits your stop loss, so that you lost $1,000 because it hit your stop loss, then 13R means if instead of hitting your stop loss, it hits your target, you made 13 times that 1,000. You made 13,000. A lot of times traders get in when they trade and they think about that individual trade. First of all, guys, trading is not about the one single trade you're taking. It is about the system. If you focus on the system, your profits will come. If you focus on the profits, each trade individually, you're going to be very inconsistent as a trader. So that's the first thing. Second thing is stop worrying about absolute profit. Okay. Look at your risk, your return on risk. Okay. How much, if you're going to risk this much, are you doing it for something that makes sense? If you're going to risk $1,000 to make $500, it doesn't make any damn sense, right? Why would that make any sense? I don't care how good the trade looks. It just doesn't make sense when you look over a period of time, right? So when you're looking at 2R, 3R, 5R, 10R, whatever it happens to be, now you're really talking. But those trades that I was talking about, that Bitcoin and that render trade, were not leveraged. There was no leverage, and they weren't oversized positions, and they were using proper risk management as I teach it. and you were still able to make almost 4R on one and up to 13R on the other. So 17R in less than 24 hours on 2 trades. I'm telling you guys, it's crazy. You know, when you do it right, when you learn how to trade properly, it changes everything. Until then, you're very, what's the word I want to use here? You're very, when it comes to trading, you're very cynical, right? Because all these people talk about this stuff and it doesn't seem to work for you, right? And all that. But when you learn to do it properly, especially the more you actually learn about how and why price moves the way it does, oh my God, everything looks different. And all of a sudden trading becomes something fun. You're not worried about what all the yahoos are saying online about, oh, it's dying, oh, it's going up to $1 million, whatever. You know, you're just out there doing your trades and making your money and not worrying about it, right? So it's all in your approach and understanding, but you have to get that understanding, right? Very, very, very few traders have ever made it just on their own without going through some sorts of course, and usually multiple courses, without having especially some sort of mentor or a coach of some sort. It took me having that before I was able to get where I am today. I tried to do it on my own to begin with, and yeah, that sucked. That sucked. First 4 years sucked really, really bad. Yes, I said 4 years, guys. Sat there and lost money for 4 years, and then finally decided I had to get serious about it, right? You guys have heard the story. But anyway, you know, this is the reality of it. You know, so few people actually want to go out there and they look and they go, oh, well, if I pay money to somebody, that's bad. Well, no. If you pay money to somebody and you take that information and it makes you money, that's good, right? That's good. Your other alternative is you can try to do it on your own, but which 97% of people aren't successful doing it. So, I mean, you got to kind of weigh, right? You got to weigh. You got to figure out, are you serious about it or not? That really is what it comes down to. So just some thoughts that I've had, through the years getting to where I am. Hopefully that helps you guys out, okay? Murray says, man, I went 0 to hero just with your pivots points course, just like that. Yeah, we're actually going to get out there and sell that here again soon. We only had it open that one time about a year ago. We're going to sell that coming out here for anybody that's interested in as well. Really kind of a deep dive into pivots, what they are, the different types of pivots, how to use them effectively, setups that you can use to trade them and whatnot as well. Happy humidity in Texas. It is a bit humid in here. I've got it cool in the office though, so I've got my my pullover on. But yeah, it's warm outside. We missed most of that tropical storm, thankfully. It kind of turned really west there, went into Mexico, but we still got some of it. Galveston Island got flooded. People over there flooded, so that sucked. Let me see here, but let's go ahead and jump in here real quick, guys. Let's see. Where are we at here? Well, I guess we'll go ahead and start with Bitcoin, and then we'll move our way to alts, okay? Well, here we go. All right. So this is Bitcoin. Nothing's changed, guys. It's still 3 months of range, right? Just beyond 3 months of range there. We do have this appears to be a descending wedge that's just fallen through the daily pivot. Of course, it is the 21st. We're getting into the last week of the month. So the pivot isn't as strong as you get toward the end of the period of the pivot, than what it is like toward the beginning, right? But in terms of this rally from what's the spring down here to the swing high, we just are hitting a 50% retracement here. That's all we're hitting right here. As you can see, we do have bullish or hidden bullish divergence printing right here between this swing low and this swing low here on the, what is this? The RSI. Now, could it potentially, this is the CME, by the way, guys. This is the CME. I thought I had the other chart up, but it's a CME. It is what it is. It's good. But yeah, so, we kind of get to this point down here. And by the way, we're going to have a contract change or contract switch right here on Thursday, the 27th. That's next week. So just be watching for that. This is the continual. So, that'll switch to the next month's contract. but almost oversold down here. You can make an argument here that potentially you've got a 1, 2, 3, 4, and 5. You can make potentially that argument there. Another possible argument is you've got a 1, 2, and then you've got a 1, 2, 3, 4, 5. So then you've got a 1 ABC, ABC, and then 1, 2, 3, 4, 5 you're working on here as a flat. If you subscribe to this 1, 2, 1, 2 idea here, then actually you've pulled back about 70.5% right now. Right there. So that's an institutional pullback level. If you've taken my price action course, there, the Trading Academy, you know why. But yeah, so that's kind of where we are again. Wedge forming here, looking for that turn and that rally, right? Again, weekly here, we've got the same place here. We've got hidden bullish divergence. So we've got higher lows in price. We've got lower lows in the oscillator. By the way, you'll notice the pullback is only to the R2 pivot. That's where we're getting support right now. So, strong support area that we're looking at. 4 hour, almost reset and oversold down here with the RSI. Stoke RSI is oversold. S1 pivot, trying to hold as support at the moment. Jumping here to the 1 hour. Could push down here further. We're getting kind of a rally here. We did get this bounce off this bullish divergence right here, which gave us this rally up and this pullback now. I don't know if that pullback, what does that look like? Let's see here. I don't know. 15 minutes looking okay. Maybe a 1, 2. I'd have to zoom in further on this to see. 1, 2, 2, 3, 4, 5. A, B, C. I mean, it's a deep 2, but it's possible. But that's a really short time frame. So what am I looking for? At the end of the day, what I've been looking for is impulsive breakout above the hourly pivot here. Now, this is going to change. This is the CME, which changes on Sunday evening when it opens back up. But again, that's when crypto, your spot will change. It'll pull it down, probably closer to this 66,360 or so, something like that. So basically what I'm looking for is impulsive breakout and close above that hourly pivot, above this descending resistance here as well. If we can get above that, impulsively and close above it, that should indicate that the bottom's in. And if the bottom's in on that, then the rally off that should lead to a new all-time high. Finally get up to a new all-time high, right? So basically the idea is we rally back up, got close to here, right? Pull back, and you're just finding support right in this same area here, right? Makes a lot of sense. And then we'll look, and then next move out would be the breakout, right? So it's an up, it's a retest of the breakout of resistance here. We're retesting it as support. Then we'll look for that breakout up. Remember, when we were over here, I said usually what we'll get is a push up, a pullback, and then we'll get the big breakout. I talked about that quite a few times. And so far, that's kind of what we're looking at right now, right? Let me see here. Yeah, Bamboo says Bitcoin in that weekly order block and daily fair value gap, which has a bullish order block sitting right below it. Yep. Exactly what I've been mentioning. This right here, right? There's your daily fair value gap right there. There's that nice order block right there. A lot of reason to look for it as support there, right? Bamboo says 6-month chart is closing in 9 days, would be the highest close ever if it closes above 48,000. It'll confirm the bullish order block, so might go to touch the order block and rally from there. So in any case, still bull. Yeah, man. Exactly what I've been talking about, exactly the same things I'm looking at. You can look at this so many different ways. Price action, Wyckoff, Elliott wave, all these things, right? And they all kind of get you to the same point. But if you don't understand any of these things, you look there and you don't really understand what's going on, and you listen to the talking heads with the big accounts, on social media that are all very bearish, and you listen to it over and over and over again, you're going to be thinking bearish, right? You don't want to get caught with your pants down, guys. How do you think the markets will react to further escalation in the Middle East? There are some concerning news about Israel and Hezbollah. Let me see here. If I remember correctly, you said that the market reaction to such events are usually temporary. Yeah, exactly. And, it really kind of depends. Does the U.S. really get involved? Everybody was worried about the whole Ukraine thing, and it turned out to be nothing, right? In terms of markets, right? In terms of the U.S. market, the U.S. didn't really get directly involved. I mean, sending money and all this other crap. But, the U.S. didn't go there, and put 100,000 boots on the ground or anything like that, right? So, yeah, when you're looking at that, usually, the start of the war, there's like a knee-jerk reaction if there's going to be some kind of event or whatever. But I don't trade based on news events. So I just trade based on the chart. And right now the chart isn't showing that we'd have some major drop here or anything with Bitcoin. So not really expecting that to happen. Does that make sense? Invert the chart. I don't know why people like to invert the chart. It doesn't help with anything, right? There you go, right there. If you wanted to say what this would be here, yeah, maybe, but again, you're just rallying up into the fair value gap order block right here. A lot of overlapping price action, right? There's no impulsive price action movement, so it would suggest that this is corrective, right? I mean, that's what we do. And again, then you have the divergence here on RSI right now with that. So it doesn't really do anything to invert the chart right here, unless you want to really believe that the tops, and then you go, oh look, it's an Adam and Eve. It's not even an Adam and Eve here. It's like an Eve and Eve double bottom, right? But again, it's a lot of overlapping price action here. That's going through there. And what you're looking for is impulsive price action. We don't have that here, right? We're looking for impulsive price action. We don't have any of that here either, right? This is all overlapping price action here. So, yeah, I'd be careful kind of looking at that and going, oh, well, it's a double bottom there, or it's a double top here. By the way, that doesn't confirm. By the way, even if this was to be a double top, it's not actually a double top until it closes below this swing low. So you'd have to get a close below here, and then you could say, okay, it's potentially a double top. Right now, the best you could say right now is it may become a double top here, right? So just, again, some different ways to look at it there, right? Yeah, Chop City, basically. Yeah, exactly. We're just kind of it's all overlapping, right? Look, you've got this down. Even the upswing here is all overlapping, right? And then we're coming back down and we're overlapping over the overlap over the thing here, right? Here we go again. Actually, here we've got a little bit of more, what do you call it here? Impulsive movement, right? You see these big series of candles, and big series of candles just kind of pulls back to the previous resistance area. Big candles pulls back to the previous resistance area. Whereas here, you see how it's all overlapping, how it all continues to go up and down. You've got one kind of impulsive movement here, but immediately back into a deep overlap with what we had here. You see that? The difference here being you've got big candles that aren't really overlapping. There's your breakout. It's not overlapping. There's your breakout. It's just finding support there, right? But then right here is where you have all this overlapping price action. And so, again, overlapping price action is not conducive to a trend change, I guess you could say, right? It doesn't mean it can't possibly happen because we do have things like leading diagonals. But, this is just a bunch of up and down candles all over each other, right? All over each other. Every one here, basically. It's all mostly sideways with a little down, right? sideways here with a little down, sideways here with just a little down, back over sideways again with just a little down. See what I'm saying? Hopefully it makes sense, guys. Let's see here. Let me kind of catch up with you guys here. Bamboo, what are you saying about the 10-year DXY and 10-year yield is getting a divergence? Looks to me like a sign that the DXY is about to top out. Yeah, exactly. And I've been looking for the DXY to kind of potentially be topped out around this area as well. So yeah, I'll probably pull up the chart here in a minute, and we'll look at that. But yeah, that's the way I'm looking at it. So no change in that as well. Let me see here. Let me go with these other charts here real quick before I forget them, and then we'll get over to that. Let's see other reasons why Bitcoin is probably going to head up higher, right? So you can look here. This is Bitwise, the Bitwise Bitcoin ETF. Okay, BitB. Why am I using Bitwise? Because I like those guys, man. But it looks like a pretty clear 5 up and 3 back, and 5 up and 3 back. Now with this local wave 2, 3 back here, we're hit the 50%. We could still come on. We could even come on down to the S1, which is just beyond the 78.6, and be perfectly fine. I don't think we get that. I think we're probably closer to a reversal than not. But yeah, just looking for that reversal head up. We need to break out here above this wave B, up here at $38.21. We break out above that. That says wave 3 is in progress. If we go from kind of this area we're at right now, that gives us about a $51 target for wave 3 of wave 3. And then you say, but Chris, that's just one of them, right? What about the other ones? Well, okay. So let's look at the biggest one. Let's look at IBIT. This is IBIT. This is BlackRock's Bitcoin ETF, right? This is by far the biggest one out there. You notice the structure looks pretty similar, right? Let's do this. Let's throw BitB on top of it. This right here. Same structure, right? So it's the same count. It's the same count there almost exactly between BitB and IBIT right here. Look at how almost perfectly they align. Of course. Why aren't they? They're doing the same thing, right? So, yeah, again, if you look at the Bitcoin chart and things we look about there, okay, there's that. If we look at the ETFs, which have, you might argue, an even clearer count on them since their inception, we've got that there. So yeah, if I'm looking at that, I'm going, okay, yeah, well, I think, we're probably headed up there, sooner rather than later, headed up higher, right? Others, this is the altcoin dominance chart, basically, right here. I've posted this on social media not too long ago. I think it was earlier this week. We've got what appears to be 5 waves up and then a WXY correction. So it's ABC down for W, ABC up for X, ABC down for Y. It's also almost a 70.5 retracement. It's also the S1 pivot on the weekly. Also, the weekly RSI is just about to hit oversold. Stochastic RSI is bottom out and oversold. So I'm a big proponent when I'm talking to new traders, especially about not taking a trade just because there's a chance. Look for the higher confidence trades. And what do we mean by higher confidence trades? That means you want to take trades where there's a confluence of factors coming in that suggests you're probably more right than you're wrong. Again, there are no guarantees in trading other than if is that you're going to lose money as a trader from time to time. And the newer you are, the more often and the more money you'll lose. That's the only guarantee in trading. Other than that, everything else is based on probabilities, not possibilities. So you'll get some people out there that say, listen, well, we need to look at the chart this way because it's possible. Well, no, if we take that mindset into consideration, we'd never take a trade because so many things are always possible. Even if there's like 0.5% of a chance or 0.1% of a chance that it's possible, right? If you say we have to look at something because it's possible, then that means we have to look at everything that's possible, no matter how little that possibility is. Again, as a trader, you'll never take a trade if you do that. So what do? You look in terms of probabilities. What is actually most probable? And that's what we're looking for. So when you get a confluence of support, areas of support, reasons of support, right? Again, when we're looking at this, you say, okay, 5 waves up, it's 3 waves down. That's the first thing. It's pulled back almost 70.5. That's my favorite level, the 61/8, the golden pocket. But anyway, right there, that's 2. The pullback is actually to the weekly S1. It's not even like the daily pivot, right? This is on the weekly time frame, the S1, or the monthly time frame, the S1 pivot. That's a strong support area there. 4 is we're bottomed out and oversold Stochastic RSI. 5 would be RSI is just about to hit oversold. So again, now this is the weekly. So, this is not going to close until Sunday at 12 a.m. UTC on Sunday, right? But there's a lot of things happening. Oh, and by the way, it's also lower volume node here. That's another reason. So when I say look for the higher confidence trade, this is the type of trade I'm talking about, right? This is the area. Now, it doesn't mean it has to definitively be done right about here, but this is definitely where you should be looking at it. And if it is done here, guess what? Alts are likely to start rallying pretty soon, which when you look at the alts, many of them have pulled back on their local 5 up and 3 back. They've pulled back around 70.5. Same thing is what we're seeing here on the dominance chart, right? Yeah. So again, we're looking there, you go, well, alts look pretty good. So when you look at that and you go, okay, well, now what about Bitcoin dominance, right? Let me see here. Oh, I can't ever remember what I, what is it? Is it BTC.D? That's what it is. Let's pull this dominance here, Bitcoin dominance up. Look at that, still continuing to go. Locally here, looks like we got 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Broke out above wave B. 50% pullback will get us the pivot here. That's around the 54.7%. Now, does that mean Bitcoin has to drop further from here? No. All it means is that alts in general have to run harder, faster than Bitcoin does. They can all go up at the same time and Bitcoin dominance still fall. If your alts are running up harder and faster than Bitcoin, then they're going to eat on that Bitcoin dominance, right? So Bitcoin can go up from here, alts can go up from here, and Bitcoin dominance can still drop for this level. But then we're looking for a reversal off that carries us up here around 59.8 for 3 of this larger 3 up here. So still looking for it to break out here above 60% on dominance here for Bitcoin. Harder, faster, stronger. That's right. What is that from? What movie is that from? I forget. But anyway, yeah. So again, when you start looking at charts objectively, right, and you start looking, you go, okay, well, screw my emotions. Screw what I think needs to happen or what I want to happen because I'm down really far in alts, so I need Bitcoin to drop further and my alts to rally. You don't have to, right? They can go up. This goes back. Daft Punk, that's what it is. Okay, thank you, sir. But that's what I was talking about months ago when I was talking about the idea that, listen, we'll probably have alts and Bitcoin running both. It won't be the cycles that we're used to seeing where Bitcoin goes in and then alts, right? Otherwise, alts should have been rallying all the last 3 months here while Bitcoin's been going sideways, right? But they haven't. But I was talking about months back about how we'd probably see, because remember, potentially a different type of person in the ETFs than are generally in in alts, especially as as the year goes on, right? As the ETFs mature in the first year, right? I don't want to say they mature in its first year, but as the length of time they're out there goes on. And so that was the same thing that the guys over there at Bitwise started saying as well, right? I can't remember if it was Teddy or Hunter, but came out and said the same thing basically. And they were seeing that we probably wouldn't have this rotation that the crypto bros, those of us who've been there forever, kind of usually expect, right? So you'll see Bitcoin continue to rally, and then you'll see altcoins continue to rally along the same kind of thing there. But also, I think we don't necessarily see the same type of every alt thing kind of going up, right? So this is something else I had talked about earlier in the year, which is this idea that alts are starting to segment, right? So again, and we've seen this over the last few years. DeFi summer, and we have meme coins all running together, right? Same idea here. So alts will continue, I think, to rally, even as Bitcoin rallies. But the alts that rally are not going to be like just the brand of everything that's going to rally. I think it's going to be like from segment to segment kind of thing. So maybe your rotation generally is going to come with a few of the different segments in altcoins versus the rotation from Bitcoin to altcoins back to Bitcoin. Does that make sense? So that's what I'm thinking. That's been my narrative here for most of this year now. We've been almost 7 months now, and so far seems to kind of be working with that. Let me see here. We've got USDT here. As you guys know, stable coins have been dropping off. The availability of stable coins has been dropping off quite significantly, right? So now we have to look in here and go, okay, so what's going on with these guys here? Actually, let me see here. I think, let me see here. I've got a 1, 2, 3, 4, 5, probably actually a 3 and a 4 here. Then a 5. I think we're actually looking at something like this. Now this gets interesting, right? Why does this get interesting? Because now your stable coins are starting to rally, right? And so, if you want to print more stable coins out there, you get you more Bitcoin, right? But nonetheless, we've got this pull down here around the S1 pivot. We've got, let me see here. Potentially a 1, 2, a 3, and a 4, maybe getting a 5 up here. Or it could even be a 1, 2, 1, 2 since we didn't quite hit the 1, 6, 1, 8. But, I would be looking at least up here around 6.18. That's if we've got a 1, 2, a 3, and a 4, and we're getting a 5 up there. But again, could be 1, 2, 1, 2 heading up. This is the weekly that we're looking at here. But some possibility there for them to kind of flow up, right? If someone sells Bitcoin through the ETF, will it affect the price immediately, given that the actual settlement is delayed by a day or two? It's actually just, it's T+1 these days. So up until, was it May? I think up until April or May, they got to choose T+2 or T+1. As of April or May, it's now all T+1. So now it's just one business day. And so that's usually when they'll get settled within that one business day. It doesn't happen immediately because they don't, the ETF aggregates its buys and sells after the end of the trading day. So yeah, so if you're in an ETF and you're selling in the middle of the day, it won't show up until after the daily close, and that's when they then sell or they buy. And they don't buy and sell everybody that bought and sold, right? It's just the aggregate. If they had 71 million sold and 100 million bought, then they would just buy 29 million, right? But no, it does come after the end of the trading day with that. So that's why you usually see, sometimes you'll see those bigger moves in the U.S. time after the New York session closes. Now, they don't all buy at the same time or sell at the same time. Some of them do it right pretty close afterward, within an hour, I believe. Others, I think, like BlackRock, I think, is a few hours later, like a little bit later into the evening when they do it. So yeah, that's how that kind of works. Let me see. Let's jump over to Ethereum, Bitcoin. So again, if you're thinking, well, are all coins going to move? We have historically looked at Ethereum, right? The Ethereum versus Bitcoin chart, because Ethereum is the largest platform, for all those things to be built on and whatnot. So if we look here, got a 1, 2, nice wave 3 here. And then potentially a 4 here, looking for a 5 to come up. Let's see. I think, see, if I look at this, I think this is 3 up here, and then this is ABC 1, 2, ABC 3, 4, ABC 5. So I think this is a flat correction for wave 4. Okay. So if I'm looking at this, it's going 1. Let's do this here. We go 1, 2, 3, and then A, B, C is 4. And then we'll look for 5 up here. So what does that mean in terms of targets? Give us this local target of 0.06161, which again gets you right to these equal highs area here, right? So that's where I'm looking for it to take us. Let's see here, 50% should pull us right back to that swing, almost to that swing low area of wave 4. It does. So then we get, we'll look for that pullback in this target area, down back here toward 0.05252. And then now you're looking at, once we get that pullback there, right? And you're looking at 1, 2, 3 up here around 0.0876, 4, and then 5 up here, 0.09891, which takes us above this range that we've been in here. Well, so far, including today, about 925 days on that. But it does look like this may be a spring down here with the strength of the move back up into the range here. And so we'll just look for it to kind of hit this local highs here, this previous support resistance area. Pull back, and then we'll look for it to rally up higher. And the next, wave 3 all the way up through here. Again, we break kind of out, then we pull back, and then we get the big break, right? Same thing we're talking about with Bitcoin, right? The rally up toward the top. Sometimes it breaks a little bit higher, sometimes right around the top. But break up right into that area, you pull back, and then you get your big move through. So again, no matter what kind of chart you're looking on here, it's suggesting that if alts are not bottomed yet, they're probably pretty close to it. Most of them would be. Again, we can pull up, for example, let me see here. Let me pull up ADA, right? We can pull up ADA here. Give it a minute. All right. So potentially, here's a similarity, right? Here's ADA. I don't worry about whether you like it or not. I'm just showing you the chart, right? 1, 2, 3, 4, 5 up. W, X is a triangle, and then Y down here almost, well, it's right here on the 61.8, right? Right here as we get to the low volume node, again, descending channel support, EQ area. I mean, all these areas daily RSI oversold. Stochc RSI bottomed out and oversold. If we, look at the swing low there, section get us a bullish divergence on the daily. And that's from mid-April, guys. So a couple of months of divergence on that. We look at that, right? Now, what do we need? Well, we need a breakout above wave E of triangle here, of triangle X there. So that means we got to get a breakout above 49 cents. But if we do that, all of a sudden, we're looking to break out above this swing high up here at 81 cents. We're looking to break out above that. I mean, that's a pretty clean movement off the low here. Nice pullback. Looking for that, just that move to get back up there and break out higher. And so a lot of your alts are kind of looking like this, okay? We'll look at VET again. See here. SDT. I don't remember when we looked at it. It was this back here, back on the 22nd of April when we were looking at it. So if we're looking at it here, and again, wave 2 pullback, 3 waves, right? It just stopped just shy of the 61.8 here, right? So we got 50% target there. Let me see if we can kind of move this over a bit so we can see it a little bit better. Okay. Yeah, so again, kind of right here at the low volume node, kind of dipped right through it and right back up. We're coming at that support area. Generally speaking, wave 2 usually pulls back to wave 4 of the lesser degree. So right here, here's wave 4 of the lesser degree, wave 4 of 1. We pull back there. It's usually around a 50% pullback. You see this all the time. This is where you should start looking for that wave 2 to kind of be around that area. It doesn't mean it has to do right exactly there. Still come down lower, but generally this is the first place you're looking for wave 2. Now, again, if we're looking at Elliott wave, well, we got to get above, this wave B up here. What is that there at just over 5 cents, 0.05155? Well, wait, no, I'm sorry. Yeah, no, that's right. 0.05155. Got to break out above that to add confidence to it, but obviously by that point, we should be looking to go, right? Another way I like to look at things is capitulation, right? So we start with expansion into contraction. And what does that mean? That means the correction starts more sideways and ends more straight down. So when we look at this, that's what we're talking about here, right? Starts wide and gets sharp here. I'm usually looking for a reversal when this happens. Sometimes it happens the other way. Sometimes it starts sharp and then just kind of goes more sideways, right? So it kind of inverts. It looks almost like this. This is stuff I teach guys day in and day out at the Trading Academy. But it can look more like this, right? So, I'm sorry, more like this, right? So you have more of a sharp drop here. I got to get this actually set up a little bit better here. Yeah, sharp drop, and then it starts moving more sideways like that, right? Opposite of what you see here. But either one of those usually leads to a reversal. When you go from expansion to contraction or contraction to expansion in your correction, it usually leads to a reversal. So again, we're kind of saying, Peter went with the banana zone. I knew you were going to say that. When I first pulled that one and looked like a banana, I was like, man, y'all were going to say something about that. But there it is. So again, it may not be necessarily just about done here, but if not, it's probably pretty close. Also, by the way, see the pivots here? We've dropped down through the S3 pivot. usually when you're between the S3, S4, S5, this area here, that denotes the end of the pullback most of the time, right? The same reason as same way as when you're going up and you get up to the R3 pivot, the R3 to the R5, that area is usually the end of the run. That run at that time anyway, usually get a bigger pullback after that. So here we are again on the daily, down to the S3. RSI reset and oversold. It's threatening to cross bullishly. Stoke RSI crossed bullishly, broke out, and is halfway on its way to neutral right there. Notice, see, you guys that hang around here and really pay attention, this is you're getting stuff, this stuff that I teach again at the Trading Academy, and you're getting for free right here, okay? Look at this. You see this move down? What's going on with volume? Significant drop, right? Most of your volume is up here. This is your distribution, right? This is your markdown. Look at how volume drops off on the markdown. Look at how much lower it is here than it was over here. Overall, it's coming down. Actually, overall, it came down here until we got to this point. Now we've got a higher bit of volume coming in there locally, right? Over the previous one here, right? At the swing low. You want to see that volume, if you can, if you see a big volume spike at your swing low, pay attention. If you leave a wick, right? If you see a volume spike at your swing low on a downtrend and you leave a wick, a good wick, watch for that area or right around there. It might drop just a little bit lower, but right around the area, it's telling you demand is showing up significantly. And usually that's the area you want to watch for that reversal, right? So as we can see, if we zoom in here, look at how big this wick is in relation to the body. If we do this, that wick is half the body, and you've got a spike of volume at the decline, and it's right on the S3 pivot, which, as I showed you, was right here in the low volume node. Well, where I had it, right? It's in this low volume node, right? So again, a lot of confluence coming in means that you should be paying attention right now. You absolutely should be paying attention right now, because guess what? If this is 5 up, this is 3 back, your next move up is what? Right? Your next move up from this current low, if we get the rally off here, 3 waves up is going to be up here right around 24 cents, right near the all-time high. Minimum expected, right? Minimum expected wave 5 target up here around 41 cents. 41.42. And you're like, oh, but that's crazy. It's not going to do that. And I go, oh, but what happened here? Right? So, don't think it can't happen. Right? Let's say it was even just an ABC, right? You're still looking up here at almost 10 cents to potentially almost 14 cents. So let's say instead of a 1, 2, this is an A, B, we're getting a C, right? You're still likely going to get at least to 10 to 14 cents. And right now we're sitting at 2.5 cents. So 4 to 6 times on that, right? Does that make sense? But anyway, yeah. So looking for that to kind of work with it there. Let me see here. Let me kind of catch up with you guys. Let me catch up with you here. What do we got? Doge. Let me see here. Doge has just been this great setup for a while here. When it moves, it'll move. But right here, again, we have this large bit of accumulation right here. Okay. This is the weekly, by the way, here. So accumulation up through about 616 days. This big candle with that big spike of volume is our jump across the creek. leads to a show of strength. We've got our back of the edge of the creek here. And so you notice we went aggressively here. Once we got through the pivot, we went aggressively up to the R2. And then we kind of went all the way up to R5. And now we're coming back. Remember, I said that R3 to R5 is usually where you get, the end of your move, right? So here we are moving back now. Yeah, let me kind of zoom into the daily here. Well, we do 3-day real quick. We're right around that S1 pivot on the daily. Here we are. So let's do this now. Nice little consistency with the rejections here. That's what we call the back up the edge of the creek. The creek was that resistance here that you get the big candles through. The creek is just the supply. Where's the supply? It's right here. You see where these swing highs are? That's your supply. How do we know? Because price isn't getting above it. Price is getting rejected and sent back down until it breaks out impulsively. When it broke out impulsively, it did not come back and check it as support, right? That's what it's doing here. It's come back to check it as support. So we want to look for that rally up. I would say probably just look for a breakout above this descending resistance here, which will likely be right around that 15-cent area. If you can get an impulsive breakout that closes above it, that's going to signal the back of, we're probably done there. We're heading up higher. We can just do, based on where we're at here, just a real quick target I can pull off there. If we were to go from there, yeah, see, it gives you that 35.5-cent target area as a quick target if we rally from where we're at there at the bottom. Let me see here. Ton. I know I've got it up here somewhere. Give me a minute. Find it. It's under one of my other ones here. Where is it? Well, shoot. I don't know. I guess let me make a new one here real quick. Let's see where we're at here. Does the length of the correction impact the targets going up? Do you mean length in time? I don't really work with time. I work with levels. The longer, the deeper the correction is. If it's a wave 2 correction, it'll give you a shorter wave 3 target. If it's a wave 4 correction, then the deeper it is, the larger your wave 5 target will be. Kind of the opposite. But basically speaking, the longer it takes, for the correction to finish, the longer it consolidates. So like on when we look at Doge here, right? The longer we go on sideways here, building our cause here, then the stronger and harder it should break up, right? So that's why we got this big, huge candle on the weekly here. That's a big candle, right? I mean, that weekly candle was 85%. It was an 85% rally in a week. And then it continued up the next week. So yeah, the longer you're going sideways, the stronger and harder the breakout, or if it's, a distribution, the longer and harder the drop will be. But, not a proportionate thing that I could tell you. Oh, ton. Let's see here. We've got we've got bullish divergence showing up right now on the weekly, but we had it there, and then we're pulling back, and now we're getting hidden bullish divergence right here. So we'll probably break out higher. The weekly Stochc RSI is almost reset down there and oversold. As you can see right here. Let me see here. If this is just going to be an ending diagonal here, then we need, if this is going to be a 1, 2, 3, 4, 5, it's going to have to stop prior to, that kind of $11 area, because if it goes bigger than that, then wave 3 will be the shortest. And we can't have that. Waves 1, 3, and 5. Wave 3 has to be the longest or the middle wave. So just something to think about there. But generally speaking, based on this pullback here, we've got a general target up here of about $10.50, just based on this pullback. So that's where I would be looking initially on ton. Apt. Yeah. By the way, if you haven't signed up, guys, for my newsletters, you need to do so. We get the market breakdown, which goes out weekly. It's free. And then we have a small charge for the, which you can get in for a one-time founders thing, right? Because we just launched it. The Bitcoin miner stocks report. Jump in on that. Bitcoin miners are about to go, guys. And some of them are even started. We did 7 charts last week. This week coming out on Monday. Coming up, we're going to have another 7 different miner charts. News and information going on. And we're going to start expanding the commentary even more. We had a little bit of a commentary first week as we're trying to get a feel for how the newsletter needs to, flow. We're going to need more commentary this week. But yeah, I think if you're trading stocks, I think you should be focused on Bitcoin miners, not just for the sake of mining Bitcoin itself either. Again, as I was alluding to toward the beginning of the show there, it's what they can become, what they're starting to become beyond just Bitcoin, and what that means in terms of, takeover targets and all that other kind of stuff. But you can go to bitcoinminerstocksreport.com/upgrade. And you can get in there for, like I said, a one-time small charge. But once we get those initial 500 subscribers signed up, you can't get into that anymore. You have to pay monthly for it. But again, the kind of information that's in there, you'd be crazy not to if you're trading stocks, right? I mean, where else are you going to go for $50 and make huge amounts more, right? Just not going to do it. What do we got going on here? Did not break out higher. Got caught right up there in the swing high. Let me see here. It looks like bullish divergence here. It looks like we might be getting it again here slightly. This area to that area. Looks like we might be having it there as well. The 3-day is almost reset and oversold. Again, right here at the low volume node right there. I could see it coming down a bit further in this low volume node, maybe $6 there. What would that be? We're already there, right around 78.6 on this pullback here. Yeah, what you're going to want to see is you're going to want to see a breakout and close, an impulsive breakout and close above this weekly pivot around $11. If you're looking at the bigger picture, that's really what you want to see. Let me see here. Yeah. Locally, I want to see a breakout above. Well, I don't know. I think we can probably even do the descending resistance here. I want to break out above this. So it'll probably be around that, almost that $8 area. If you can get an impulsive breakout and close above that, it's going to signal that your bottom is probably in. Again, we've got large lower wick on that candle. We've got a downtrend. We've got a spike of volume at that low. So now we just want to see some follow through upward now. Little consolidation here. We want to see that breakout and head higher there now. And so if you can get that, my first target would be this weekly pivot up here, right around $11. Impulsive breakout and close above that. I would look up here toward 1730. I will say $17.50 to $18 up here, right prior to this this swing high there, right? I like this area. So $17 to $18 would be my next target. So first thing here is you want to see impulsive breakout and close above that descending resistance. Once you do that, it gives you a target here of about $11 around that weekly pivot. Impulsive breakout and close above that gives you a target up here around $17 to $18. And that's how I would look at it right now. Let me see here. Pepe. People still trading Pepe? Pepe. What we got here? Guys, do me a favor. Hit the thumbs up. Hit the like. Subscribe to the channel if you haven't already. Follow me if you're on one of the other platforms other than YouTube. Or, subscribe to the channel, of course, if you're on YouTube. Do me a favor and do that. Again, it's not for me. It's really all about, copy here, all about those algorithms so that people can also see this information. Otherwise, they'll continue to put me below all the other idiots over there, people that really don't know what they're talking about and that are making people, buy and sell when they shouldn't buy and sell, right? Okay. Let me see. What do we got here? 3, 4. All right. Yeah. So we're just a little bit higher than where I had my top. Just a little bit higher there. And let me get these off here. So that pulls us. We were looking for a 50% pullback. Got a 38.2 right there. So, again, we got caught up right here in that low volume node. This is just 3 waves up. Broke down below it. It looks like 3. I guess maybe it could be 5 there. Let me zoom in a little bit more. Three, 4, 5. 1, 2, 3, 4, 5. 1, 2. Back at the 3 day here. This is a pretty clear third wave right here. See all the big advancing candles, not really overlapping. Big spike of volume coming with them. So that's a third wave there. So 1, 2, 3, 4, 5 gives us this 3, 4. Let's see. So these off there. As far as the daily goes, I haven't quite hit that S1. You see the S1 pivot is there with the 50%. That's where I would be looking for it to pull back to. Right around this 8200 area here. We might get, this might be A, B, C up here, and then get 5 more down to get us here. So it looks like 1, 2, 3, 4, 5, maybe. Let me get this out of the way. Where are we at on terms of weekly? See, the weekly we ran all the way through. If it's there. The weekly Stochk RSI is almost reset into oversold. And we got bullish, or I mean, we got bearish divergence up here. If we look up here, you got higher highs, got lower highs here. So I think this weekly will probably drop down and give us lower lows on the weekly, give us higher lows on price. Potentially, again, hitting that 50% level there. If we do rally from here and break out higher, that's going to suggest that that this is maybe like a wave 4 here. So maybe it's like a 1, 2, 3, 4, 5. So if it did continue to break out higher, it would just go up toward $24,700 area, 24,700. If it's to rally and break out from here. But again, I think we could see maybe a little bit of a bounce here and then continue further down toward that 50% area. And then that just gives you a higher move, obviously, on the next bit, right? Yeah. So I think it goes down a little bit further there. But just in case it does break out, we'll be looking up there toward that target before we get the pullback. And then the pullback, we'd be looking back toward this kind of area where we're at here. So it sits in there. Let me catch up with you guys here. Man, oh, man. Just kind of catch up with you guys here. I have no clues what Gary Network is. You'll have to give me a ticker symbol for that. Yeah, Litecoin continues to be sideways. Man, oh man, that thing. If that thing can get going, shoosh. Let me see here. Come on. We'll look at this chart right over here. Yeah, there's been a heck of a sideways there for sure. Looks like a large triangle. Looks like ABC, 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 and maybe ABC done right here. This looks like just 3 up at the moment. I mean, it could be a leading diagonal. So 1, 2, 3, 4, we'll get a 5. So we'll have 1, 2, and then heading up. If this thing can break out through that wave B swing high up there at $413.46, I mean, that gives us a 2486 target based on the height of wave 4 here, the overall height from the swing low to the swing high. Which a lot of people are like, oh my God, no, I can't do it. I don't know. I don't know if it will or not, but based, the same way that all the targets I, give you guys all the time when we're talking about fifth wave targets, same way. Right? So that's what we're looking at. Let me see here. Troy says, been waiting almost a year for Bitcoin miners to start moving. Was happy to get in on that Founders Edition. Thanks. Hey, yeah, man. Appreciate it. Yeah, no, I thought, anybody that's been following me, I've been a big proponent talking about Bitcoin miners for like the last year and a half. And had you listened back, a year and a half ago, CLSK was one I was, talking about a lot. And, that went from $2 and change up to $25. So, I mean, that was like a 12X in the last year and a half. And other ones as well have moved well, as well. And so what I'm trying to do with this, with that newsletter, is trying to give clarity on Bitcoin miners, and not just the individual companies, but Bitcoin mining in general, and what's happening with it and where is it headed. And because people get in there and go, okay, well, again, when you look at Bitcoin for the price only, it's easy to be convinced, oh, it's not going to go up further and it's at the top and I shouldn't get in because I've got unit bias, and 64,000 is a lot of money. And I'd rather put my $1,000 into something where I get a whole bunch of little ones, little shit coins, and hope it goes up, and you do all these things to yourself. Whereas when you understand the potential and what's a good likelihood to come because of Bitcoin, how Bitcoin transforms things, all of a sudden it looks like, man, I should at least be putting some money into Bitcoin and just not touching it, right? In addition to whatever else I may be doing. The same thing with miners, right? If you're looking at miners strictly for Bitcoin mining, you're missing the bigger picture. You're missing the ideas of high performance computing, HPC. You're missing the idea of AI, because Bitcoin miners are basically just large data centers. Now, there are levels to the data center, right? And so if you're AI, you have to have a cleaner data center. Whereas if you're mining Bitcoin, you can be in a dirtier, dustier kind of thing, right? So, Bitcoin miners, would have to clean up a bit, do a little bit of retrofitting, but the profit margins are a lot more on AI, right? And then if you're looking at that, right, the different Bitcoin miners approach it all differently. Some of them own their own data centers. Others lease space in other data centers, and then they sell their computing power, right, which is what they're doing, to the AI or the HPC, right? So again, there's all this different little bits of intricacy going on in that Bitcoin mining space, and so there's a bit to know about it as far as what you're thinking about, who maybe you want to enter or where you want to enter, whatnot. But the big focus is on the charts as always, right? And so again, we did seven miners last week. We're doing 7 more this week, and then we'll do 5 more the next week. And then we'll be updating them every week, all of them every week. So yeah, again, you can get in there for $50 one time and never have to pay a monthly fee after that. 2 years down the road, you're still in, and you can still make, money off the miner stocks and trade them. So anyway, that's what we're doing with that. Let me see here. Injective. Let's see. I have to go in just a couple of minutes here. All right, so we just missed the wave 5 target. Looks like we got it right here, or wave 5 of 3. So ABC 1, 2, ABC 3, 4, ABC 5. Yeah, ending diagonal. Let me see here. We're going off this. There we go. But I think, yeah, no, that's not going to be 1, 2 there. I think this is actually 3, 4 here due to this big drop here. So this becomes 5 here. I haven't looked at this chart since January 18th. So yeah. Okay, now what's going on here? Let me see. Because this looks like, this doesn't look like a top here. This doesn't look like, wave 5 of 5 up here based on this pullback. So there's a count that I need to redo somewhere in here. Let's see. We do have that bearish divergence here. Coming down. Yeah, see, if this was to be, we would only just be starting this injective move down here. But here on the 3-day, looks like this is 1, 2 here, which doesn't really change all this, I guess. Let me see. This may not even be a triangle right here. Five, where would 3 be? So at least up in this area, which gives us this move up here. One, two, 3, 5, 3, 4, 5. Yeah, so this could potentially still be 5 here. Yeah, see, that's a 3 right there. That's a 5. Let's see here. 1, 2, 3. That could be 4 there and 5 heading up. So that would make this 3 up here. Okay. So you have these big candles still going up through here, suggesting this is all 3. So let me see here. Two, 1, 2, 3, 4, 5. I'm going to take this down 1 here. No, that's going to be fine. Triangle. And then 1, 2, 3, 4, 5. It's the wrong one. Okay, here we go. So we got 1, 2 here. And then 1, 2, 3, 4. Get the 5 up there. This will look clean in just a minute here, guys. It's going to take this out here a bit. 1, 2, 3, 4, 5. All right. And then let's get rid of that. Let's do this here. 3. There we go. Yeah, that's looking better. 4, 5. Let me see. Oops, he's got to be down 1. See, Elliott wave's easy. All right, so now we got 5 of 3. Gives us a 2 right there. Look at that, just about a 38.2 pullback. Let's see here. So it's potentially ABC done here, but we need this to hold. If not, we look around the 1640 area and then around 1144 if we're going to get a deeper pullback. But if this low is in right here, that gives us a target of $105. Expected target of $105. If it's done. Again, if it's not done, we're looking around the 1640 and then around 1144. And all that'll do is it'll raise that target up higher. It's not done there. Yeah, looks like it could be done there, though. The problem is there's no impulsiveness here. This is all overlapping. So it could be, 1 and then A, B, C as a flat with a deep 2 there, and then rally up. So this we're going to see if we get there. But yeah, let me see here. But that's going to do it, guys. It is 12:30. I'm sorry that I couldn't get to everybody. Unfortunately, I'm just one person. But yeah. What are your average win ratios using the count formation, say over 10 years? Are you talking about Elliott wave count? Oh, I have no clue. It just, I don't use them solely with themselves. I'll usually use them as targets. Again, the way most people teach Elliott wave is here's your target and that's it, right? The way I teach Elliott wave is think of Elliott wave like your GPS in your car, right? And so it gives you a path from where you are to where you want to go, right? It gives you a path. But along the way when you're driving, there could be construction, there could be some kind of car accident, some kind of environmental thing going on, and you have to take a detour, right? And it informs you of that as you get to it, right? So you look at Elliott wave as a general, like, okay, a plan of, okay, I want to get from here, where can I potentially go? Okay, here it is. And as you start the trip, you go, well, 1.168 for wave 3, wave 4, wave 5. You say, okay, well, that's how I would generally expect to get there. But that can change as you're going, right? Wave 3 can overextend. Wave 4, instead of coming back 38.2, can come back 50% or even more, which gives you a larger wave 5 target, right? Wave 2 may only come back 50% or 61.8 or 70.5, right? So all those little changes along the way, especially a wave 3 that really overextends. So instead of 1618, it goes to 2618 or 3618. That's the same thing as when you're in your GPS in your car and, it alters your path along the way because of construction or something. So when you use Elliott wave, that's the way you should think about it, right? That's the way you should think about it. You look at your general targets and you don't sit there and count every little wave along the way, right? Not as it's building up, right? If you're looking to do it over, a few months or whatever, your targets are where they are. Want them to go, right? But also what I teach is Wyckoff and price action. And so you can use those together to make your Elliott wave even better, right? Or you can use Elliott wave with your Wyckoff to make your Wyckoff even better. And of course, with price action to make it all better. So like what we did in this week's Wednesday price action session for our students is I was showing them, and I think I did this last week as well, it's price action. So we talk about price action, but then I said, listen, here's how you can use your Elliott wave or your Wyckoff with your price action to get you an even better entry. What do we mean by better entry? A logical entry with a stop loss that's closer. Why do we want a stop loss that's closer? Because the closer your stop loss is to your entry, the bigger your return can be on your risk, right? Show you guys here real quick. I've got to go, but I just want to show you guys this real quick. This is the stuff we talk about all the time, right? In the academy. But like, let's say you're going long, okay? And let's say you enter right here and your stop loss is right here and your target's right here, okay? So you've got a 3.38 R, right? That means if you don't hit your stop loss and you hit your target instead, you're going to make 3.38 times your risk. Your risk is how much you're going to lose if you hit your stop loss. Again, if that's $1,000, if you don't hit your stop loss, you hit your target instead, you're going to make $3,380, okay? Risking just $1,000. But what if instead of having this, you enter at the same point, right? Target's at the same point, but what if your stop loss can be right here? Well, now you're making 10.5 times your risk rather than 3.38. But you can't just move your stop loss up just to move it up, right? You can't just do that, because that doesn't make sense, right? That's why you guys get stopped out all the time. You try to get your stop loss right up the butt of your entry, but it doesn't make sense where it is. But that's where we use price action on smaller time frames to help you figure out how to get that potential stop loss closer, so you can still be entering the same place, still have the same target, but have a much closer stop loss that makes sense, that's logical, that's where it should be, so that you can make, almost 3 times as much as what you would make normally there, right? I do teach a trailing stop. As a matter of fact, one of the things you get when you join the Trading Academy is that I teach what is absolutely the best and the only trailing stop anybody should ever use. And I teach that. I teach you how to do it. It's pretty simple to do, but I go through the mechanics of it, the logic in it. And with something like that, like let's say this was your target here and you're doing that. And as long as if you're following that going up, this 10.5 could potentially become 20 or 26R or whatever here by using that manual stop loss, the way that I teach them how to do it. So yeah, we do all these things, right? It's all about teaching you guys not just how these big systems and trading strategies work, but the things that I've learned over the last 30 years on how to benefit best, right? What are the things that you need to know? For instance, the price action course that you get access to, I teach you the most important concepts, the only ones you really need to know to be successful trading price action. Now, as the months go on, I'm going to be adding more in-depth information for those that want to learn more, but I teach you what you need to know. You don't need to know all the other stuff that I'm going to add in there. That's just for people that want to understand it better and get a better feeling for it. But you just need to know the stuff that's in the course right now. And so that's the goal. The goal is to make it so like you can come in. Like I said, if you were to join today, you could watch two specific sessions that we had of price action, and you would have 2 techniques you could use that are going to immediately change. Immediately. I'm not even kidding with you guys. They will immediately change. I've posted the comments there on Twitter from our students, right? They will immediately change the way that you trade and the success that you have. It's just 2 hours. And if that was all you ever learned being with us, you would be better for it. You would be that much better for it. But if you're smart, you'll continue to go through everything else we have to offer. And it's a lot. Because if you go through it all, you'll start seeing how all these kind of ways of trading all come together. They have different names and a little bit different techniques, but they all kind of come together. And they come together because of how and why price action happens, how and why markets move the way they do. There is a rhyme and a reason to it. But that's my goal at the end of the day. I teach you all this stuff. My goal is by the time you leave, that you will hopefully understand how and why markets move like they do. Because if you do, you can pretty much take anybody else's techniques and systems or whatever out there and use them effectively and probably even make them better, because you'll understand the thing that most people don't understand when they're trading. But you got to pay attention for that, right? So anyway, guys, listen, I'm going to get out of here. I hope you guys had, an informative show here. I hope you learned a lot. Again, even if you're not with us, and if you're here following me here on the show, I'm going to try and give you something to learn. Because if you're following me, I'm not like everybody else out there, right? And so I take that seriously. Yeah, I'm not for everybody. A lot of people don't want to learn. If you're here and you keep coming back, I assume you really want to learn. Hopefully you'll join us, of course, but until you do, I'm going to keep trying to teach bits here and there along the way here to give you actionable stuff that you guys can use when you're out there trading, okay? So anyway, there we go. As always, remember the only thing you control is how much you lose. So please keep working on the risk management. You know, again, you can join us different ways. The Market Breakdown at themarketbreakdown.com. That's the free newsletter. You can subscribe to that. Bitcoin miner stocks report.com/upgrade. You'll be able to, you know, jump on that right now at the founder's price right there. I think we've still got a few more open on that. When we've hit the 500, that won't be available anymore. You won't see it as an option. You have to pay monthly, but even paying monthly, you know, you're going to, if you pay attention to it, you're going to make money with it, right? Or again, you can join us with our group coaching. You can do 3 months, 6 months, 12 months. We got the links underneath the video here and on pinned post there on my X account. So, you know, however you guys want to join in and want to figure it out and want to be a part of what I do, you know, whether it's free to paid more or whatever, you know, I'm trying to put as many options out there for you guys as possible. So hopefully it helps you out to some degree. Okay. All right, guys. Hey, listen, I appreciate you joining in as always. If you haven't yet, do me a favor. Like the stream, like the post, share the link, leave a comment, all those kind of things, guys. If you have any questions about today's show, you know, things I talk about on here, you can leave those in the comments as well. And I'll get to them as soon as I possibly can. I try to answer everybody. So there you go. Okay. All right, guys. I hope you have a great weekend. Y'all trade safe. Take some time off. As a matter of fact, don't trade straight through the weekend. You gotta clear your thoughts, right? But other than that, I'll see you guys next week. Wednesday, don't forget, Wednesday is the Beards and Bitcoin show with myself, Andrew, and Tillman. Mind-blowing stuff, I believe, happening on there. 11 a.m. Same links here as always. And then, of course, this show again next Friday. All right? Y'all take care. Thanks a lot for joining in.